The market is alarmed by the threat of the second wave of the coronavirus pandemic, so stock indexes took a nosedive despite a series of upbeat macroeconomic data. Next week, the economic calendar reminds traders of important data which cannot be neglected. On early Monday, traders will get to know a report on China's industrial production for May. Output of China's factories is expected to rebound to 5% on a yearly basis. That could boost appetite for risk, at least in the short term. So, riskier currencies will grab the chance to win back some losses. On Tuesday, traders will be alert to a stream of news from the UK. The focal point will be a climate count change for May. Last month, investors found out that the number of unemployment claims grew by 856,600. This time, the report is likely to show a moderate increase of 290,000 applications in May. Though experts refrain from precise forecasts, no wonder the long-awaited positive trend in the labor market will arouse optimism about the British economy and the pound sterling. Those ones speculating on the euro are anticipating a survey by the ZEF research group, in particular an economic sentiment index for Germany. The odds are that the index has been carrying on with its climb in June. Experts reckon that the index of institutional investor sentiment could reach 57 points. The news is going to add some shine to the euro's investment appeal, so the euro-dollar pair is expected to gain ground in response. On Tuesday evening, traders await a report of major importance. The United States is due to report on retail sales. Importantly, consumer activity accounts for over two-thirds of the US GDP. Thus, retail sales will provide a clue to further trends and prospects of the US economy. Economists foresee a 7% increase in retail sales in May, following a 16.4% slump in April. This will revive the bullish sentiment on the US dollar. On Wednesday, traders will focus on the UK economy. The consensus suggests that an annual growth rate of consumer inflation is to 2.6% in May from 0.8% in April. This will definitely assure the British monetary authorities to revise the ongoing policy meeting. A traditional measure to bolster low inflation is a rate cut, so a hint about this move will trigger sell-offs of the pound sterling. Traders speculating on the Canadian dollar will receive a similar signal. After economists recorded deflation in August, the market does not dare to make a forecast of consumer inflation for May. One thing is certain: Canada's CPI is expected to post a further CPI decline that will raise expectation of a rate cut by the Bank of Canada. Analysts foresee a climb of the USD cut pair. Apart from the above-said data, it would be a good idea to take notice to other important reports in the first half of the trading week. On Monday, don't miss trade balance data for the European Union and the report on Canada's manufacturing sales. On Tuesday, the Reserve Bank of Australia is due to release the minutes of the latest policy meeting. Besides, the Bank of Japan will unveil its policy decisions. Later, Germany will provide revised data on consumer inflation. The United States will report on industrial production. On Wednesday, investors will find out a series of inflation data for the European Union countries. The US will publish a batch of metrics on the construction sector. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.